Welcome to Market Brief After Hours. We have a lot to cover today, starting with a much-needed sigh of relief on Wall Street. After 3 consecutive weekly losses, U.S. equities finally found their footing. It seems the main catalyst here was a significant pullback in the energy markets.
That is exactly right. The market has been incredibly tense lately, entirely focused on the geopolitical situation, particularly the escalation involving Iran and the tanker traffic through the Strait of Hormuz. When you have that level of uncertainty in such a critical global shipping choke point, risk sentiment naturally takes a massive hit. But today, we saw oil prices retreat from their recent surge, and that gave investors the green light to cautiously step back into equities.
Let's get right into the numbers for the major U.S. indices, because it was a solid day across the board.
It really was. The Dow Jones Industrial Average rebounded beautifully, gaining 0.83% to close at 46,946. The S&P 500 recovered from its lowest close of the year last Friday, climbing 1.01% to finish at 6,699. It is worth noting that despite all the recent volatility, the S&P is actually only about 4% below its all-time high. And then we have the Nasdaq Composite, which led the rally today, advancing 1.22% to settle at 22,374.
Technology stocks really did the heavy lifting for the Nasdaq today. Nvidia was making headlines again, wasn't it?
Yes, Nvidia rose more than 1% as its annual GTC conference kicked off. The market is still fiercely hungry for anything related to artificial intelligence infrastructure and advanced chips, and that enthusiasm is providing a very strong floor for the broader tech sector.
Now, going back to the oil markets, that pullback was quite dramatic. We saw Brent crude surge above $100 a barrel last week for the first time since 2022. Where did we land today?
We saw a sharp reversal. Brent crude futures fell 3.10% to close at $100.04 per barrel. U.S. West Texas Intermediate, or WTI, dropped even further, sliding 5.38% to settle at $93.50, though it did briefly trade above $100 earlier in the session. This decline was triggered by comments from U.S. officials indicating that Iranian oil tankers would be allowed to pass through the Strait of Hormuz. There is also talk that Washington might announce a coalition of countries to escort ships through that route, which significantly cooled the panic in the energy sector.
That cooling effect definitely spilled over into Europe as well. How did the European markets fare with this news?
They track the U.S. markets higher. Investors over there are hyper-focused on energy volatility, given their proximity to the Middle East conflict. The Pan-European Stoxx 600 rose 0.77% in afternoon trading. Looking at specific countries, the UK's FTSE 100 gained 58 points to close at 10,319. Germany's DAX had a great session, adding 132 points to finish at 23,579. France's CAC 40 rose 24 points to 7,935, and Italy's FTSE MIB edged up 11 points to 44,328. We also saw Switzerland's SMI increase by just under 43 points to settle at 12,882.
I also saw some major corporate activity making waves in the European banking sector.
Absolutely. Commerzbank was the standout, surging 8.8%. This came on the back of news that UniCredit is planning to increase its stake in the German lender to above 30%. The market is reading this as a clear stepping stone toward a full takeover bid, so banking stocks across the continent attracted a lot of attention today.
Let's pivot to the Asia-Pacific region. The performance there seemed a bit more fragmented, despite some fresh economic data out of China.
Fragmented is the perfect word for it. It was a mixed bag. In China, retail sales actually beat expectations, increasing 2.8% year-on-year for the first 2 months of the year. Industrial production also climbed 6.3%, beating forecasts. However, the urban unemployment rate ticked up slightly to 5.3% in February. As a result, China's CSI 300 ended flat at 4,672, though Hong Kong's Hang Seng Index managed a 1.45% gain.
And what about the rest of the region?
Japan's Nikkei 225 slipped a bit, losing 0.13% to close at 53,571. Over in South Korea, the Kospi rose 1.14% to 5,550, largely supported by semiconductor giants like Samsung and SK Hynix. Down under, Australia's ASX 200 declined 0.39%, and New Zealand's NZX 50 fell 0.2%. But India had a stellar day.
The BSE Sensex rose 1.26%, and the NSE Nifty 50 gained 1.11%, helped by their unemployment rate easing to 4.9%.
Fascinating how regional data can cause such a divergence in performance. We are going to take a very quick break, but when we come back, we will dive deep into the foreign exchange markets, check in on gold and crypto, and highlight today's biggest market movers. Stay with us. Welcome back to Market Brief After Hours. Before the break, we covered the equity and energy markets. Now let's look at currencies. The Forex market saw some interesting technical setups today. Let's start with the euro.
The Euro-USD pair rebounded modestly today, closing at 1.1507, which is a 0.79% gain. It recovered nicely from its intraday lows to post a bullish daily close. However, the broader technical structure is still under heavy pressure. The price is currently trading below all its key moving averages. It is below the 50-day simple moving average at 1.1740, the 100-day SMA at 1.1690, and the 200-day SMA at 1.1673. When you are trading below that entire cluster, it signals that momentum has definitely shifted to the downside.
How is the British pound holding up in comparison?
Very similarly, actually. GBP USD finished the session at 1.3325, advancing 0.77%. But just like the euro, the pound remains trapped beneath its major technical levels. Overhead resistance is heavy right now, with the 50-day SMA at 1.3516, the 100-day SMA at 1.3396, and the 200-day SMA at 1.3440. The pair recently broke below the support area formed by those 100-day and 200-day averages, which shifts the near-term bias firmly to the downside.
Is there any currency pair bucking that downward trend?
The Australian dollar is looking incredibly strong. AUD-USD extended its uptrend today, climbing 1.33% to close at 0.7072. Unlike the euro and the pound, the Aussie remains firmly supported above its key averages. It is trading comfortably above the 50-day SMA at 0.6961, the 100-day SMA at 0.6770, and the 200-day SMA at 0.6652. This reinforces a bullish pattern of higher highs and higher lows that has been developing for quite some time.
Let's transition to precious metals. Gold has been on a wild ride recently. Where are we sitting now?
Gold is taking a bit of a breather. It closed at $5,012 today, slipping just 0.12%. After a massive rally earlier this year, prices are essentially consolidating around that psychological $5,000 level. Technically, it is still very strong, holding well above the 50-day SMA at $4,940, the 100-day SMA at $4,557, and the 200-day SMA at $4,039. Traders are just waiting to assess the next directional move.
And silver?
Silver rebounded today, rising 0.42% to close at $80.92. Buyers definitely emerged after the recent pullback from the February highs. It is currently sitting below its 50-day SMA of $86.49, which is acting as immediate resistance, but it remains well above the 100-day SMA at $71.55 and the 200-day SMA at $55.81.
Another asset class catching a lot of attention as a potential safe haven right now is cryptocurrency. What did the digital asset space look like today?
Cryptocurrencies rallied hard. We are seeing a trend where some investors are viewing crypto as a hedge during periods of intense geopolitical tension. Bitcoin rose 3.1% to $73,687 over the past 24 hours. Ethereum surged 7.5%, and XRP gained 5.2%. Bitcoin is actually up roughly 10% since late February, completely shrugging off the broader volatility we've seen in traditional financial markets.
Before we wrap up, we have to talk about today's market movers. There were some massive individual stock swings today. Who were the standout performers?
Nebius Group was a massive winner today, rallying 15%. This came after they announced a massive $12 billion capacity deal with Meta. As an AI infrastructure provider, securing a deal of that magnitude with a tech giant is a huge vote of confidence.
I also saw a massive jump in the real estate sector.
Yes, national storage affiliates absolutely skyrocketed, closing up 30%. They agreed to an all-stock buyout by Public Storage, valued at roughly $10.5 billion. Mergers and acquisitions are always a great catalyst for individual stock pops.
You mentioned Meta earlier regarding the Nebius deal, but Meta's own stock moved today as well, right?
It did, gaining 2%.
This was driven by speculation and reports of potential large-scale workforce reductions. Meta came out and described the reports as speculative, but Wall Street generally rewards cost-cutting measures, hence the bump in the share price.
On the flip side, were there any significant losers today?
Fertilizer stocks took a beating as their recent momentum completely faded. Intrepid Potash dropped 8%, while Mosaic and CF Industries both fell more than 5%. They had run up quite a bit recently, so this looks like investors taking profits off the table.
To summarize today's action, it feels like the market finally got a chance to exhale.
It did. The softening of crude oil prices and the slight stabilization in the geopolitical rhetoric provided a great window for equities to rebound. However, we have to acknowledge that trading volumes were relatively light. A lot of major players are still sitting on the sidelines. There is still a fog of war mentality out there, and people are remaining cautious.
Plus, we have the Federal Reserve's two-day policy meeting right around the corner. Treasury yields actually fell today ahead of that meeting, with the 10-year dropping to 4.226%.
Exactly. U.S. industrial production rose 0.2% today, but manufacturing activity in New York State fell sharply. The data's mixed, and all eyes are going to be on Fed Chair Jerome Powell. The market desperately wants to know how the central bank is interpreting this energy-driven inflation and the ongoing global instability. That press conference is going to dictate the next major move for both equities and fixed income.
It is going to be a crucial few days for the markets, and we will be here to break it all down for you. Thank you for tuning in to today's episode. If you find this useful, please follow Market Brief After Hours. We'll see you next time.